a 13.9% coverage ratio with 4 days remaining. Shanghai pays $10 more per ounce. Those two numbers rarely coexist without stress building fast. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. Now, silver just closed at 74.65 after a 7% weekly loss. Let's get straight into it. Lead story today. COMEX May 2026 silver contract positioning. 34,641 contracts remain open into first notice period. That equals 173.2 million ounces of potential delivery demand. COMEX registered inventory implies a 13.9% coverage ratio. Paper leverage stands at 7.2 times available supply. Effective first notice day arrives in 4 business days. This follows steady inventory draws across recent months. The unusual detail is simultaneous Asian premium expansion. Shanghai trades silver at 85.35 per ounce. That is a $10.05 premium over Western spot pricing. The timing is what deserves scrutiny, not the event itself. The timing. Think about what that sequence actually means. A thin coverage ratio meets elevated physical demand abroad. That compresses flexibility inside delivery windows. What happens if even a small fraction stands for delivery? The ones paying attention already know what to watch next. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Before I show you the full data picture, consider this. The last time coverage ratios approached 15%, volatility expanded sharply. The data is already telling you something. Let's build it out. Now let's build the full picture because COMEX positioning does not exist in a vacuum. CME Group delivery reports have dropped. 34,641 open contracts reported by CME Group. COMEX warehouse stocks published by CME custodians show registered inventories. Shanghai Futures Exchange pricing confirms 85.35 per ounce. That is a 13.35% premium in a single trading session. Compare that to historical premiums under 2% for most periods. The Silver Institute projects a 67 million ounce deficit for 2026. China customs data shows highest imports in 8 years. Industrial demand rises from solar, EVs, and data centers. The rate of demand growth is not slowing, it is compounding. The data is doing the talking. The ones who have been called early for tracking deficits are not saying much right now. And here is what makes that picture even harder to ignore. Coverage ratio sits at 13.9% against open interest levels. Paper leverage remains above 7 times physical availability. At the same time, registered inventories increased 3.6% over 30 days. That is not a contradiction. That is the setup. And before anyone takes that as a green light, timing remains uncertain. Setups can take a long time to resolve. What this tells you is the structural picture. The timing is a completely separate question. Anyone who claims to know the timing is selling something. Here is the number most people are not talking about. Federal Reserve rates sit between 3.50% and 3.75%. Now monetary policy, because this is no longer a backdrop. It is the primary variable. The Federal Reserve signals a pause into April 29th. The US dollar index trades near 98.8. That marks its first weekly gain in 1 month. Oil prices remain elevated across global benchmarks. Real yields stay positive in this environment. That suppresses paper silver demand in Western markets. The cost of holding non-yielding assets increases directly. Markets are still pricing stable monetary conditions. Look at dollar strength and tell me that risk is neutral. When markets start pricing sustained inflation pressure, silver reprices upward. When the dollar strengthens further, silver reprices downward. That is the historical pattern. Every time real yields rise, metals face pressure. It has not been different yet. Silver Western spot at 74.65. Shanghai trades at 85.35 with a $10.05 premium. Short-term picture shows divergence between paper and physical markets. Key event remains first notice day for May contracts. If delivery demand increases, premiums expand and price follows higher. If contracts roll into July, pressure remains on Western pricing. That is the only short-term read that matters right now. As for trading it, I cannot see a clean picture on the lower time frames right now. I cannot tell you what silver does tomorrow. Nobody can. If you think you know, good for you. Current conditions show elevated volatility and conflicting signals. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when I see it clearly. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one you ignore is the one that will cost you. So let's run both. The bear case is real. The US dollar index at 98.8 pressures commodities broadly. Real yields above inflation-adjusted thresholds reduce silver demand. Majority of contracts historically roll forward before delivery periods. The bull case is equally real. Shanghai premium at $10.05 signals physical tightness in Asia. Coverage ratio at 13.9% limits delivery flexibility inside COMEX. The Silver Institute confirms a sixth consecutive supply deficit. Size correctly. Know what you are in before you are in it. The physical market already knows where this is going. The paper market is still arguing. That argument does not last forever. Everything I showed you today points to one thing. Structural pressure exists between paper claims and physical supply. The only question is when that pressure resolves into price. Don't take my word for it. Verify every number I gave you today. Check the data yourself. CME Group, Shanghai Futures Exchange, the Silver Institute, logic over hype. Always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for the mainstream to catch up. They already know. OG John AG 1.0 out.